Good morning, investors, and welcome back to the Stock Sense Morning Brief, your daily pulse on the Pakistan Stock Exchange. I'm Malik, and it's Friday, November 21st, 2025. We're here to give you a concise yet comprehensive look at yesterday's market action, key sector movements, corporate developments, and the broader economic landscape influencing your investments. Let's dive right in. Yesterday, November 20th, the KSE-100 index managed to close in positive territory, adding a respectable 710 points, or about 0.4%, to settle at around 162,900. This followed a stronger rally of over 1,290 points the day before, so while still positive, the momentum softened slightly. Total traded volume on the main board stood at about 208 million shares, significantly lower than the nearly 362 million shares traded on Tuesday. However, the traded value remained robust at over 35 billion rupees. Market breadth was positive, with 250 advancers outpacing 187 decliners, while 39 scripts remained unchanged. Now, let's look at the sectors that really moved the needle yesterday. The automotive assembler sector, unfortunately, pulled the market down, contributing negatively by about 25%. This suggests some selling pressure or profit-taking in the auto space. On the flip side, oil and gas exploration companies provided a significant boost, pushing the market higher by roughly the same amount, about 25%. This indicates renewed interest or positive sentiment in the energy sector. Meanwhile, commercial banks, a heavyweight sector, also exerted a downward pull on the market, though to a lesser extent, impacting the index negatively by less than 10%. Moving on to the technical picture, the daily analysis from TradingView paints a largely bullish outlook for the KSE-100. Most moving averages, from short-term to long-term, are signaling a buy action, indicating a prevailing upward trend. Looking at pivot points, the classical pivot stands around 162,650, which the market closed just above yesterday. Key resistance for today could be found around 169,000, while immediate support lies closer to 155,300. Overall, the technical indicators suggest a positive underlying sentiment. On the corporate front, for today, November 21st, we have a board meeting scheduled for the Pakistan General Insurance Company Limited to consider matters other than financial results. Investors might want to keep an eye on any announcements from that meeting. Also, a few companies are holding their annual general meetings today. These include Chenab Limited in Faisalabad at 11:30 a.m. and Chalkwell Spinning Mills Limited in Lahore at 10 a.m. For those interested in Mobilink Microfinance Bank Limited, MMBLTFC, today marks the start and end of their book closure period. We also note that there are no companies for which today is the last day of entitlement for any distributions. In macro developments, we've seen a flurry of positive news. Pakistan Petroleum Limited, or PPL, clarified that it's not building an artificial island, but rather a setup to support marshy area drilling, which could lead to new oil and gas discoveries and boost its profitability. The Asian Development Bank has approved a substantial $330 million loan to expand clean energy transmission in Pakistan, a crucial step for integrating renewables and improving energy security. We also saw foreign loan inflows surge by 33% from July to October, mainly from the IMF and multilateral lenders, which is vital for our external financing and reserves. This has also contributed to a significant 39% jump in profit repatriation by foreign investors over the past 4 months, signaling an improving investment climate and dollar liquidity. Furthermore, large-scale industrial output expanded by 2.7% in September, with notable growth in the automobile and cement sector, pointing to a recovery in economic activity. This positive sentiment was reflected in the market with yesterday's rally, largely driven by local retail investors. However, it's not all smooth sailing. The IMF recently highlighted corruption risks across state institutions, proposing reforms for transparency. While this is a precondition for future disbursements, the commitment to reforms could ultimately unlock economic growth. Similarly, the FBR's plan to install AI-based cameras in 17 major industrial sectors to combat tax evasion while aiming to boost revenue could increase scrutiny and potentially impact corporate profitability in those sectors. Also, the government's commitment to privatize PIA this year, even without guarantees for buyers, is a significant reform step, but it certainly presents its own challenges. Turning to institutional flows for yesterday, November 20th, we observed that foreign investors were net sellers, offloading about $1.4 million from the market. This was primarily driven by foreign corporates. However, local institutions stepped in as net buyers, absorbing roughly the same amount. Leading the local buying were banks and development financial institutions, which made significant net purchases of over $6 million. Broker proprietary trading also saw some net buying. On the selling side, mutual funds were notable net sellers, offloading about $2.6 million, along with other organizations and individual investors who showed slight net selling. My take is that while we saw a positive close yesterday, the reduced trading volume and the mixed institutional flows suggest a cautious optimism. Foreign investors are still in a selling mode, but the strong buying from local banks is providing crucial support. The economic news flow has been generally positive, particularly concerning foreign inflows and industrial output, which should underpin corporate earnings. However, the ongoing structural reforms, like addressing corruption and tax evasion, will be critical for sustained long-term growth and investor confidence. The technical charts are flashing green, but investors should remain vigilant, keeping an eye on global cues and any further domestic policy announcements. And that wraps up your Stock Sense morning brief for today. Thank you for tuning in. Remember to follow us on YouTube and your favorite podcast platforms for daily updates. Until next time, stay informed and invest wisely.